Hey YouTube, this is Zach with Achilles Financial. Today I'm going to be talking about Fisker Inc. And the reason for that is because, as you can see, the stock had a huge day-to-day rising, inclusive of after-hours trading, right at 23%. And it has been a crazy move for them today. And a lot of this movement, if you look at the news, and I am using TD Ameritrade as my platform today, but they simply had a huge move upwards due to the fact that Morgan Stanley announced a $40 price target on the stock. So the reason why we're looking at this stock is because, generally speaking, when a company announces a price target, they are looking at that explicitly associated with where they expect the stock price to be over the course of the next 12 months. Now, Fisker is a stock that has been incredibly exciting for a lot of investors, notably due to the fact that they occupy the EV space. Now, this is a company that currently has a market capitalization of right at $5.4 billion in total assets, or sorry, $5.4 billion in market capitalization. The reason why I highlight this as so important is because if you look at the overall valuation of the company here, you can see that they have no sales, they have no earnings, and they have no compound growth, due to the fact that when you look at their growth associated with it, they're actually not doing anything because they don't currently have a product. The reason why that may sound critical, and the reason why I want to push that, is because based on the analyst reports, we've got some significant analyst volume that are all pointing to pretty high courses. Again, you can see a lot of buy ratings, some sell ratings here from Goldman Sachs, but you can see a lot of these price targets are in the $20 to $30 range, inclusive of the one that they highlighted today. So this is a prior rating, but again, the $40 price target that they had today, which is more than 100% upside, and based off of what we saw today, that was a 20% increase if you had shares at the $15 side of the house. Based on their own recognition of where they are, Fisker has stated that they don't believe that they're going to be producing and selling their product until November of 2022. So the expectation here is, with zero sales, is that Fisker is going to be going all the way into, or they're going to double from here and be a more than $10 billion electric vehicle company, despite the fact that they currently don't have any sales. You may hear my consternation associated with that because, again, right now we're trading in a market that has obscene valuations. That being said, Nvidia is still a superpower because they're incredibly profitable and they're showing incredible growth. The same can be said with Apple, Microsoft, Salesforce. So those at least can justify some of their valuations, where you look at a company like this and they're worth $5.4 billion and people are calling for them to be at $40 a share within the next 12 months, despite the fact that they don't have any sales. I personally just find that ridiculous. Now, that being said, do they have a cool product and does it have some competitive advantages? Yes. Now, one of the things that I would highlight, though, is that just because I am looking at the company going forward and I have some opinions, doesn't mean that there aren't other insiders that are making some different bets. So you can see that there were a number of buys last year, and there have been a number of buys this year. So you can see some of the decisions or some of the moves that have been made, including some sales at the beginning of this year or a few months ago, as well as a significant amount of buys going forward. So I do think that Fisker does have the capability to be a speculative play, notably due to the fact that there is still a lot of potential upward momentum. Again, one of the strategies I like to utilize is selling covered calls, and I think that Fisker may have the capability to do so. So that'll be what I'm looking at going forward, is how can the company perform? What can they do to actually get that product up and running? That being said, right now they're trading at insane multiples, and I still think that even if the company grows to $100 million in revenue over the course of the next 18 months, that they're still going to warrant a much lower valuation, and that's simply just my opinion. So what does that mean for the company in terms of stock price? Well, what I'm looking at here is I'm more so inclined to see that we'll have this stock, it will be a $10 stock, and you can see that it actually hit there off their last earnings. I think that $10 is a lot more likely right now than $40 a share within the next 12 months. Now, that being said, we do have the capability to see how are they going to perform against the likes of a Tesla. How are they going to perform against Ford, GM, who are spending billions of dollars on building out their EV approach. However, like I said, they do have some very strong capabilities associated with the options chain. So if we look at kind of what's in the capabilities here, I'll look at the all. What I'm going to focus on is some farther out expectations. So you can see December 17th, if you purchase the stock today, which again is around $18 a share, you can actually sell the 1750 call for $375 a share. So, or $375 total, which means the stock would have to be over $20 a share. What's more likely or more capable is you can actually go in here and you can sell these much closer to the money calls. Again, $17.50. That's $200, representing a right at 13% return with an immediate return on investment. And that's something that I really like, is being able to sell covered calls on some of these more speculative stocks, so you can drive down your acquisition price. And if the stock does rocket higher, you'll still walk away with a very nice profit. There is a lot of momentum here, and that can be concerning depending on how well the company actually does in terms of meeting expectations. But whenever you see a huge gap like this, I'll be interested to see if we see that continue upward, or again, if we flatline and then do a steady climb back down, kind of what we saw up in the late March timeframe or early March timeframe. Overall, this is a company that, again, when we look at the performance here, and I'll keep it on a quarterly basis because they're still a relatively new company, they are losing a significant amount of money. You can see the Q1 numbers that they lost right at $176 million a share. So this is my expectation of the company. I think that the EV market is incredibly overvalued at this point in time, and a company like this is just not going to cut it over the next 12 months due to the fact that they don't have a product and they're not actively selling anything. That being said, if you disagree and would like to offer your opinion, feel free to comment down below or join in the Discord in the description and let me know. Thanks for watching. I hope you found this content helpful. If you did, please leave a like and subscribe. Thanks. Talk to you later.